Okay, we are live. So welcome everyone to our Thursday weekly news show. We have one new face, which is from the LendIt team, and then we have Tim, who's joined us for previous episodes. But Joy, say hi to the audience and introduce yourself for our news viewers.
Hi, LendIt TV community. This is Joy. I am president of LendIt Fintech and super excited to contribute to today's discussion. I am usually behind the scenes, helping to manage our sales and marketing teams and our women in fintech initiatives. But it's great to be front and center today.
All right, and Tim, tell us, remind the audience who you are and who you're with, the firm
Sure.
that you're with.
Yeah, thanks, Todd. Good to see you, Joy. This is Tim Lee, founder and CEO of Alchemy. This is my third appearance, maybe the fourth one. I think one of the episodes didn't get recorded correctly or something like that. Happy to be back. There's always so much to talk about in the fintech space, and good to see you guys both.
All right. Well, we've talked about this company many times on news, and we'll kick off again with them. And that's Robinhood, who started trading. It had a pretty volatile day. They were up 6, down 12. They finished down 8%. Raised 2.1 billion from the IPO. Some of the numbers: 1 billion in revenue for 2020, 550 million in Q1 alone in 2021. So clearly revenue's going up. Robinhood's a controversial company for a variety of reasons. So Tim and Joy, and Joy, I'll go to you first. Any thoughts on Robinhood's volatile trading day?
To be honest, I think this has just become expected. I never know what to expect when I turn on the news and I'm seeing what's going on with Robinhood. So I think, Todd, you said it best. Is it good or is it bad for fintech? Who knows? That's my comment.
Tim, any thoughts from Robinhood's day on the markets?
This is almost like one of those Reddit stock picks, right? Great company, definitely captured the imaginations of probably Gen Zs and Gen Alphas. Look, I think this company is gonna skyrocket. I'm still resisting the app, but I think I'm gonna have to get it now. It's a fascinating story, and I think really highly of the management team. First and foremost, they created something out of nothing. Really captured the right moment in history, in the fintech history. Last time we met, if you remember, one of the young men unfortunately committed suicide, thinking that he lost a bunch of money on the app. I think there needs to be a lot of education. I'm hoping that whatever money that they make will help them to create more education, informative, and help their younger audience to make some informative decisions. But happy for them.
I mean, overall, I think as of today, I'd probably say they're net positive on fintech, just because there's, I think 15, 18 million new people using fintech. So from that perspective, I think they're a positive. Regulatory wise, I'm not sure. It's, with the payment for order flow, and I know everyone does it, but there seems to be more scrutiny on the business model. And so I don't know what the long-term, in long-term respects are for the company. But I think as of today, I think they're net positive with the amount of people they've brought into the fintech system.
Yeah, definitely.
From Robinhood, we're going to go to crypto. And so there's been a few articles this week on crypto. You have BlockFi, who's been getting cease and desist orders in, I think, 3 states now: Texas, Alabama, New Jersey, for the way they run their business and whether or not it's security or not a security. And then you have this contentious battle in Congress on what aspect of crypto is good and what aspect of crypto is bad. Democrats fall on the side of it's dangerous and it's illicit, but at the same time, they want CBDCs and the digital dollar for financial inclusion. There's kind of two things going on at the same time. First, what do you think of what's been going on with BlockFi? And then secondly, what I think I just think we need more clarity. And Joy, I'll go to you first.
Does everything have to be a bipartisan issue? I mean, that's my initial response. And, I think about this and I see that it's not going away. Crypto is not going away. The blockchain is not going away. Yes, like all channels, if not used properly, if not regulated, there's opportunity for people to be taken advantage of, and this is no different. So the sooner we regulate, then the sooner these industries can grow and continue to innovate and do a lot of good.
Mm-hmm. I just had a conversation with the Washington, D.C. advisory firm that's all about this space. Todd and Joy, you're right. There's two separate issues here. There is cryptocurrency, store value, assets, equity, whatever we want to call it for now. And then there is the CBDC issue, right? In my view, that's the digital currency stuff. It's an existential issue for our nation as a whole. If you look at China, for example, they've already tested and implemented CBDC, can settle digital currency in real time. All that transaction will be done in real time, and they have maximum control, right? Say what you want to say about the Chinese government, they want to exert control. But they can certainly expand that and become the alternative to our Western world's settlement system. That is to say, if other nations figure out they can clear transactions internationally in real time, as opposed to go through the Western world's purview, right? A lot of these rogue nations, for example, like Iran and North Korea, will start congregating themselves over there. Russia, China has already created a separate internet, right? They're creating a separate financial system. So I think it's something like that that will drive our nations to think really hard about CBDC, right? There's going to be a lot of debate about people making money on the cryptocurrency side, but this digital currency stuff needs to happen. And it's not a democratic thing versus Republican thing. It's an existential thing for our nation, for this country, for the Western world. Anyways.
Yeah, I mean, I think that definitively on the CBDC digital dollar thing, like I think that has to happen. There's got to be a digital euro, digital dollar, whatever they come down to in terms of the naming it and how it operates. I mean, I think the most interesting aspect to that piece, I think, is interoperability. Like what systems play with each other? Is there the SWIFT essentially come in and is the main rails for a lot of this, or are they not? Or does everyone have their own crypto and then there needs our own digital dollar, and then there needs to be different rails that play into different ones?
Yes, just like the early days of internet. Remember, people were debating which operating system, what is the HTTP, is the web, what is the operating system to operate the internet?
Yeah, I mean, I think we're going to go through all that.
Here. Yeah, and we want to win that war. Yeah.
Exactly.
We want to win the standard.
I think on the other side, like the BlockFi type side, the regulators right now are only doing a disservice to a large aspect of the ecosystem that is only growing bigger and bigger. And in order to understand their business models, they need to put them under proper regulation and stop acting as if it's this, all right, we'll kind of hands off, wait and see. They need to be proactive and begin to federally and state by state begin to tell people, okay, this is definitively what you can and cannot do.
That's right.
Now build a business model based upon this structure. Right. And right now they're playing a game. And the game is I don't think serving anyone very well, because you have BlockFi going out there, and then months or years after they've been operating, all of a sudden they're getting all these letters.
That's right.
And I know that not all the products they have today was what they originally started with, but it's just they're incentivizing this chaos.
Yeah, it's the fear of unknown, right? They are thinking that everyone that's in cryptocurrency are bad. No, there's bad actors all over the place. You can trade houses, real estate, or crypto.
Wells Fargo.
Yeah.
I
Yes.
mean,
3
it's one of
accounts
the
per
biggest
person,
banks.
right?
Exactly.
Why not? Exactly. So, but that's unfortunately that's our regulators' initial reaction to things that they don't know. And if you look at some of these debates, just like the hearings they did with Facebook and Apple executives, some of those congressional representatives don't know what they're talking about, for lack of a better term. Yeah, well.
Well, and aside, as a somewhat of an aside to this, we also had late yesterday, I think it was last night, I saw that in the blockchain space, you had Figure raised $200 million, some pretty impressive investors, Apollo, Endeavor, National Bank Holdings, Golden Tree. Mike Cagney saying, the investment's going to give them further resources to fuel the mission of leveraging blockchain to reinvent financial services industry. So you have so much money in the space. It just underscores the fact that real regulatory structure will only help the ecosystem.
Yeah.
On to our next topic. I think this one's kind of one of the more fascinating ones, at least to come out of the pandemic, which is banking behavior, banking adoption. I think Ron Shevlin in his article put it, there hasn't been a lot of transformation the last year in terms of the banking system itself. It's been more adoption. And some of the numbers he quoted in his article are 95% of Gen Z, 91% of millennials, 85% of Gen X, 60% baby boomers, 27% of seniors all use digital banking today. And those numbers are clearly up from previous years. And so it becomes less of a transformation and more they're in the system now, constantly, every day. They're checking accounts, they're sending money to their friends, variety of services. So I think banking still has a long way to go, but clearly people are using the digital banking ecosystem more than ever before.
Yeah, absolutely.
Joy, Tim, feel free to jump in.
Yeah, 100%. I mean, like, I mean, I have 4 children, so all of them have access to some kind of a screen, right? They don't have a computer anymore. They have a phone and an iPad, and it's tied to their hip, to their hands all the time. Inadvertently, they learn about financial transactions, the likes of Venmo. My son, he's 12, constantly talks about Reddit, constantly asks me about these Reddit tickers like AMC and GameStop and things like that. And I've talked to me about his friend trading on Robinhood. I banned out of that household, but they are exposed to all of this stuff as a 10, 12-year-olds, right? I don't know what I was doing at 12, but certainly it wasn't talking about trading cryptocurrency or trading on somebody's meme commentary. But I totally believe it, and it's so easy now. I want to say about 30-40% of the apps, at least on my phone, has some aspects of financial transactions on it. It's ubiquitous. It's pervasive. Sometimes it's kind of dangerous, but there's a lot of companies out there that offers credit cards or some kind of a debit card, some kind of a financial instrument for kids, right? Where the guardians or the parents have some purview into all of these activities. There's 3 or 4 of them out there, but I think going back to my commentary on Robinhood, we need these companies to come out and really properly educate folks, younger folks, on what this is they're doing. Because it's not just another Reddit post. There's real transactions happening. There's real losses that could take place. Anyways, I hope they can invest more in education.
Yeah, I would add, I mean, I'm really enthusiastic about the tools that exist for younger generations, especially when it just kind of creates an infrastructure for parents to be involved in their children's financial education. Right. So overall, I think that, and I think as you said, and as the article indicates, people are getting more and more access to these digital products and engaging with digital banks and digital banking apps. But the area that still syncs with me is the fact that people are really fickle, and and I know from my personal experience as a consumer, great, it's so easy to try so many things, but it takes a lot of effort for me to be loyal to your product and service. Mm-hmm. So I think that there's a lot of jumping around, and this is a lot of dates and not a lot of marriages.
I mean, the survey, one of the articles, the survey by a research firm named Radin, 70% of millennials and Gen Z have accounts with big banks, but 33% of them are extremely or very likely to seek out another bank account within a year at a different, whether institution or digital bank. And so I agree with you, Joy. I think we're entering a stage where there's going to be lots of jumping. And people are going to trying to figure out, okay, do I want 7 apps on my phone? Do I want 2? What works best for, am I a gig worker and this combination works best for me? I'm a banker and these conservative 2 things work for me, or I think there's going to be a lot of shakeout in the next few years. But Tim, I think your point on the education is at some point it gets way too easy to do all this.
Right.
And kids are very savvy at getting around initial guardrails. And so there needs to definitely be some thinking on how do you guard against, okay, I can simply monitor my child.
Right.
But, they're probably more digitally savvy than me.
That's right.
So is there something in place that can stop them from, kind of putting $50,000 at risk or, something along those lines? I do think the education part needs to be rethought. And customer experience is a lot of things, but friction stopping really bad stuff is not necessarily a bad thing if it leads to, people not losing tons and tons of money.
Right. I teach this fintech fundamentals class at USC, University of Southern California. And in our sessions, we actually do a lot of research in these neobanks. I'd ask my students to go explore these banking options. And most of them come back and said to me that I already bank at, we shall not name names here, but a bunch of neobanks. And I switch all the time. I ask my students, whomever does offer me that 4% APY, I want to bring my check over there. It's super easy to do, right? A couple of clicks and you've diverted your payroll to another, paycheck to another bank account. But they always come back to me and say, it only lasted a couple of months and the interest rate went down to 0.00 whatever percent. And they didn't know there was a promise or it's a, marketing kind of a ploy, right? So that on the extreme points of this, right? They're learning some of the interesting way, but again, God forbid, we have these issues like these tragedies that we have with Robinhood that people just not careful, doesn't understand it, right? And thought it was one thing, it turned out to be something else. Again, going back to what you guys are saying, right? We need to have an education piece in place to let people know what this is. I know it's counter to their marketing thing, but the heart's got to be at the right place. Anyways.
Yeah, there's a lot of things out there that are a lot more short-lived than people, want to,
it's customer acquisitions, and then there is, really, these are young individuals that saw your really cool Facebook or Instagram marketing piece, but do they really know what they're getting into?
Yeah, for sure. So we'll move on to our next story, which is, I think, a weekly segment that Peter and I do on overdrafts. And so, there's been obviously a big push to get, at least not necessarily get rid of all overdrafts, but definitely overhaul how they're done. And I thought it was an interesting piece in American Banker this week that talked about, and if you listen to Peter's podcast, we'll do a shameless plug for him. In one of his most recent episodes, they talked about how much smaller banks rely on this fee income to drive their profits. I mean, some small banks, this is basically their entire profit, is all these overdraft fees. And I think as Aaron Klein was on with Peter telling on this. So, the JP Morgans of the world, yes, they have a big number because they have 60 million customers. But, an Oklahoma small bank makes, I think, 10 or 20 times the amount that JP Morgan Chase would on an individual customer.
That's right.
And ultimately counts for a significantly more portion of their revenue and profit. So, I think overdrafts haven't been fully transformed yet, but small banks are going to be in trouble regarding overdrafts, and they're going to have to figure out what are different ways to make up that fee income.
That's right. This reminds me of my years that I spent at JP Morgan Chase, actually working on some of the strategies to, well, it's been a long time, to sort of optimize your revenue around overdraft fees. And when Dodd-Frank came down on all the banks, that was the first sort of regulatory regime that says, hey, you have to sort your transactions a certain way. You can't really go and intentionally maximize your overdraft fee. And we all kicked and screamed and said, well, our consumer banking employs 20,000 people. If you do this, we have to lay off half. I didn't see anybody leaving the bank because JP Morgan Chase has all of these other divisions, right? It doesn't really matter to them. It hurt, but it didn't hurt that much. But you're absolutely right. A smaller banks, regional bank doesn't have an investment asset management division, right? It doesn't have a robust auto lending or mortgage lending platform. Depository income and overdraft, right? These checking account fees and all that stuff is really what they rely on. So again, this is another beautiful side effects of unintended consequences of all these politicians out there screaming at the JP Morgan Chases, the Citibanks of the world, but they didn't think about all the smaller banks, regionals, truly helping the communities get access to banking. This is going to hurt a lot, and especially when they're getting squeezed from all the fintechs out there to take their customers away for lending activities. I don't know, Joy, what do you think?
Yeah, I mean, my head automatically starts scratching as to what are the alternative revenue channels for these, small community banks, credit unions, because at the end of the day, a lot of times they are, as you said, the point of access to financial services in communities that are typically very underserved.
That's right. In Dodd-Frank, they had this kind of a $10 billion rule, right? If your asset is above 10 billion, you have got to fall in place, but if you're below, we'll give you a break. But again, they made overdraft such a political issue, right? They can't really have that kind of a rule, right? Okay, so you can do overdraft, you can't, because we painted overdraft fees as something so ugly. We'll see how they will accommodate smaller regional banks or community banks for that matter.
I mean, there's a way to do overdrafts, and overdrafts should be a product. They just need to not be a predatory product.
That's right. Yes,
And
I remember at a certain place they charged extended overdraft fees. It was like overdraft fee on top of overdraft fee if you don't pay this overdraft fee back in 14 days.
Yeah, so
That's horrible.
It was $35 a transaction.
Yes.
And then it was like another
24,
fee.
27 on top of it if you don't pay the 35, right?
Exactly. And if you let
and
it
their
sit in
average
your
balance
account.
is
It's crazy what some of the business models have been for so long. We have, we don't have that much time left, so I want to do a little bit of a zip through here. Some other stories. Zopa planning to raise 100 million at a 500 million post money valuation. Zopa digital bank started off in the lending space in Europe. Just goes to show you fintech is accessing the public markets all around the world, which is a good thing, I think, for the ecosystem. Any quick thoughts on Zopa going public and seeking to raise a decent amount of money?
I am super desensitized with all of this 100 million, 200 million, $50 million raises. VC communities are just nuts right now. They're willing to put money into anything. Zopa has been around for a long time. They're one of the first. But yeah, I'm just super desensitized. I had 200 million at Series D for Mike Cagney's business. okay, it should have been bigger, I suppose, right? So yeah, good on these folks. I mean, there's no other place to chase equity return other than this kind of stuff, I guess.
Yeah.
Yeah.
Joy, any thoughts on Zopa?
I think Tim summed it up.
Yeah.
Well, with the few minutes we have left here, Joy, I know there's a topic that is very important to you, and that certainly impacts, I think, not only the broader Latin American fintech ecosystem, but fintech generally. And so, tell the audience a little bit about what's going on in Peru, and potentially what that cascading impact could be across the region.
Absolutely. Thanks, Todd. So I'm a little biased. I'm deeply involved in LendIt Latin American events, and I'm married to a Peruvian. So we've been paying really close attention. But yesterday, Peru finally swore in a new president. Most of the public knows the gentleman as the man in the cowboy hat, but his name is Pedro Castillo. And it was a really, really heated election, and it took over a month for them to actually call the final result of the election. There were lots of accusations of corruption, and the election has finally been called. But it's one of many elections. In 2021, there will have been over 9 elections in Latin America, 5 of them presidential, and almost all of these elections are swinging towards the left. And it's really emphasizing, the conflict between the people living in the cities versus the people living in the rural communities. Obviously, fintech has an opportunity to provide even greater access to underserved populations, which are in abundance across Latin America and other emerging economies. But with that said, definitely has an impact to spook investors. So I'm just curious, in the past year or so, Latin America has been a huge area of investment, especially for the VC community. As these changes start to appear, is that going to have an impact on VC investment in the future? What does this mean for all of these amazing fintechs that have been in the spotlight in the past year that really are going to have to do business in this new climate with a lot of these unknowns?
Mm-hmm. Exactly. Well, we can take the rest of the conversation to the LendIt Latin American show, right? Maybe towards the end of the year. I'm looking forward to that. But you're absolutely right. I mean, I think SoftBank put together like $1 billion fund just for Latin America. And if we have, geopolitical uncertainties, it's going to be really hard to navigate, let alone all of the regulatory ambiguity that's already there. Now that we have potential a huge swing to the left, dare I say, it could be problematic for some of the people that are building these companies, as we have seen in China. Todd, I think you're on mute.
Yep. Good catch, Tim. This seems to be the one thing that can screw up a burgeoning ecosystem, because, some of these types of leaders can just, acquire power, and really stamp things out that are basically, not in their personal interest. And all that does is bring fear, and investors pull back on fear. And so it's something to watch. And you just hope that it doesn't just start seeping across the region, because right now I'd say Latin America is probably the most interesting fintech market out there in terms of the amount of access that people in LATAM don't have, and the amount of people there, and just the potential for fintech to help hundreds of millions of people gain access to a financial system for the first time ever at a relatively low cost. You have the potential to keep those people shut out. And so while the soft banks of the world certainly are allocating money to the region, they're also very quick to pull it back if need be. That leaves the people of LATAM in a bigger lurch because ultimately they don't have the
That's right.
resources to just jump around somewhere else.
The financial services banking sector could be easily painted as some kind of a evil capitalistic, public enemy number one for the politicians to dish around their personal agenda, like you said.
Yeah. And with that, we're going to have to leave it there. Thank you, Tim. Thank you, Joy, for your first news show. Thank you to the audience, as always, for tuning in. We'll be back same time next week. I
All
think
right.
Peter
Thanks, Todd.
and myself
fun.
will also be back. Okay.
Thank
See
you,
ya.
Joy. Good to see you. Bye-bye.
Bye, guys.
Bye.